Hi, I'm Dennis Dick with premarketinfo.com. Today I'm going to talk to you about sector rotation. Sector rotation just simply refers to money moving out of one sector and into another sector. So when talking about stocks, you could say different sectors are financials, commodities, retailers, pharmaceutical companies, other defensive names. That's what I'm talking about when I say sectors. In the last year or two, with so many ETFs out there, correlations have been getting closer and closer to 1. And what that simply means is that stocks from different sectors are actually starting to become correlated with each other just because they make up these broad ETFs. And people are buying baskets of stocks that include the entire S&P 500, for instance. So they buy the whole basket together, and that brings correlations closer and closer to 1. What we're seeing, though, is a little change in that in the last couple of months. We're seeing that a lot of stocks are actually breaking. A lot of these stock correlations are actually starting to break down over the last couple of months, and you're starting to see stock picking come back into favor. So, and what I would say is sector rotation is starting to occur. This has always been. I've been trading for 12 years, and there was always lots of sector rotation, but not a lot in the last couple of years. But in the last couple of months, this is starting to come back into play. So it's important to try to identify those sectors that are coming into favor and those other sectors that are coming out of favor. In the last year, I would say a lot of your defensive names, for instance, stocks like your pharmaceutical companies like Merck or Lilly or or Pfizer. Those are some good pharmaceutical names. These stocks have been very much in favor. They have nice dividends. They're defensive names. In an uncertain environment, these stocks are attractive because they're still paying you a dividend, and they are somewhat conservative. Other defensive names include stocks like Procter & Gamble, stocks like Colgate. Those stocks are other defensive names. What we're starting to see, though, is some of the stocks that have not performed that well, which are some of your financial stocks, starting to come around here in the last week or two. JP Morgan here, for instance, has had a nice run in the last month. Basically, if we look back to early December when we were trading down at 30, had a nice run to 34, pulled back to retest the 30. That held, which is good. Came back up here to this 33, 34 resistance, and then broke out over resistance. Now the stock is trading 36.05. This could be a little bit to do with JP Morgan has earnings coming up on Friday the 13th. That could obviously have a large impact on the stock, and it could move in either direction. But sometimes what you see is run-ups into these earnings reports. Other stocks that are reporting next week, like Citigroup, other financials that is. Citigroup, Goldman Sachs is reporting on Wednesday, Wells Fargo. As you can see, same thing. A lot of these stocks have really been moving up nicely here. So what I'm seeing is money is actually rolling into the financials over the course of the last week or two. Looking at the stocks that have been underperforming is surprisingly these defensive names from last year. Stocks like Procter & Gamble have really gone nowhere in the last few weeks. Stocks like Lilly have actually sold off over the last. You can see even just a week or two ago where it had a nice sell-off there. Merck has been selling. Merck's just been holding on, not doing too bad. Other defensive names like Colgate, has been pulling back too. $94, made a double top here if you go back to that October high in late December, and has sold off since too. Stocks like Clorox, another defensive name, that's actually been performing okay, but been pretty quiet overall. But sector rotation, so basically what we're seeing is money roll out of those defensive names and into some of the more aggressive names. So if you can identify, even for on your daily trading day, which sectors are stronger and which sectors are weaker, that should help you out overall. So this is just a little lesson on sector rotation.